welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
I am Grace Agbaragu. It's Wednesday, November 26th. Thank you for joining us at this time on the show.
All right, then, let's tee off with your news now. The Africa Investment Forum 2025 Market Day kicks off today in Rabat, running until November 28th. The high-level gathering brings together investors, development finance institutions, governments, and private sector leaders to accelerate investment and drive transformative projects across Africa. Let's now hear from Nadia Feta, Morocco's Minister of Economy and Finance.
The solutions to elevate Africa to the level it deserves are first and foremost within us. They lie in our talent, our resources, and our capacities to innovate, organize, and cooperate. The conviction echoes an African intellectual heritage that must embrace. The poet-president Léopold Sédar Senghor spoke at an African culture of giving and receiving, a culture grounded in exchange, reciprocity, openness, and shared responsibility. Today, more than ever, this philosophy points us to the path forward that an African that builds take ownership of its destiny and engage with its partners on equal footing. Giving is neither a unilateral gesture nor an empty posture. It is a foundational act. It is a demonstration through action that Africa is ready to fully take charge of its destiny. For our states, giving means first and foremost assuming the sovereign responsibility of preparing the ground, consolidating foundations, building institutions, securing the environment, and inspiring confidence. It means structuring our economies to make them predictable, productive, and competitive. It means ensuring macroeconomic and financial stability, which remains the primary condition for any investment. It means modernizing our regulatory frameworks, strengthening transparency, and providing investors with the clarity that expect, not as a favor, but as a reciprocal commitment.
In earnings news, South Africa's Tiger Brands reported strong full-year results with headline earnings per share from continuing operations jumping 31% to 21.41 Rand for the year ended 30 September, up from 16.31 Rand a year earlier. Group revenue rose 2.7% to 34.4 billion Rand, driven by 3.5% volume growth and lower prices as consumers remained under pressure. Second half volumes grew 5.7%, with milling and baking revenue up 5.3% on stronger volumes and lower wheat costs. Operating income surged 35% to 3.8 billion Rand, pushing operating margins to 11.1%, above the company's guidance. The company declared a special final dividend of 27.10 Rand per share. In Senegal, the nation has announced a revised GDP figure, improving debt metrics as the country faces a crisis over unreported debt. The National Agency for Statistics and Demography updated the GDP base year from 2014 to 2021, raising GDP to 17,316 billion CFA francs, up 13.5%, and lowering the public debt ratio to 80% from 90.8%. The revised figures include emerging sectors such as digital financial services, oil and gas, and cashew production. S&P Global earlier downgraded Senegal's long-term credit rating to CCC+ and placed it on Credit Watch Developing, citing risks around unreported debt. The Finance Ministry said the new GDP figure provides a more accurate picture of the economy. In South Africa, the South African Reserve Bank has released its latest financial stability review, assessing the overall health and resilience of the country's financial system. We now listen to Lesheja Kyanyago, governor of the South African Reserve Bank.
The SAP's assessment is that the financial system is resilient and has improved in the second half of the year. South Africa has been removed from the FATF grey list, and we have had the first sovereign credit rating upgrade in almost 2 decades. In one of my meetings around the G20 over the weekend, I spoke with the president of a large and famous global corporation. His comment was that in Europe, the problems are so complex they seem unresolvable, and everyone is in despair. But here in South Africa, the problems seem fixable and the energy is positive. Many South Africans are used to thinking things are great in Europe and terrible here. But remember, that isn't necessarily how it looks to someone sitting high up in a London skyscraper. We South Africans have lots of problems to worry about, no question, but we also have some accomplishments we can feel good about lately. At all these meetings, we talk about geopolitical risk, which is the central banking term for war. I will stay with diplomatic language and say geopolitical risks remain elevated. We also have concerns about global financial markets. In our most recent MPC statement, we commented on the aggressive valuations for some tech stocks, tight credit spreads, and the dangers of a correction.
In other news, Morocco has inaugurated the first Pan-African Coffee Center at the Tanger Med Port Complex, positioning the country as a global gateway for African coffee exports to Europe, the United States, and Asia. The African Coffee Hub aims to revamp the continent's coffee trade by allowing direct purchases from African producers, with consolidation, quality control, and preparation taking place in Morocco before rapid export. CEO Sanar Ben Abdelkhalik said the center will ensure quality, traceability, and fair economic returns for producers, with Tanger Med's port as the strategic location to lead this revolution. In Zambia, officials convened at State House today for a press briefing to provide key government updates and national development. Here are excerpts.
Take it $1 billion procurement value. Means Zambians to start with can be assured of $200 million. Correct my numbers. And graduating up to 400 when we get to 40% and beyond. $400 million. If the ticket is $2 billion, the Zambian component will be $800 million. Deliberately and buying an instrument, legal instrument. This was a scary proposition for many governments before us. It is now in place. My call is for the people of Zambia to become entrepreneurs, and we have asked their minds to do what they are calling supplier development program, to train our people, not to supply air, because the mines must function. If you supply air, the mines will not produce the 3 million tons. So I want to appeal to my fellow citizens. When you are given an opportunity, please supply. Don't get an advance payment and go and buy a Mercedes-Benz. Icona, man. Icona. Supply. Create jobs. I can go on, but in summary, we want your support to see legal mining, 1, 2, safe mining, not polluting our environment, not using mercury to clean the gold, not damaging the forests. 3, formal mining. We want you to earn more money. That's why we are pushing market opportunities. take it.
Finally, on News Now, Pepco Holdings received regulatory approval to enter the banking sector in South Africa, the company said on Tuesday. The Prudential Authority granted the approval, enabling the retailer to expand beyond retail and financial services, backed by its acquisition of fintech software provider CloudBadger. Pepco plans to reveal details of its banking offering and target customers in March 2026. I am Melissa Enoch, and that's it on News Now this Wednesday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our markets round. Stick around. We are here at Africa Energy Week in 2025. First day of the event is booming everywhere. A lot of people, many stakeholders from the energy value chain.
We're here to promote the need for investments in a robust downstream sector to truly have energy security for the continent.
Welcome back to Money Moves. Let's now go over to Grace Agbaragu for today's market update. Hello there, Grace.
Thank you, Melissa. Let's now track how the markets traded today, starting off with the equities. In Nigeria, the NGX All-Share Index declined by 0.48%, 0.68. The Nairobi Securities Exchange fell by 0.39% to 181.81. In South Africa, the Johannesburg Stock Exchange gained 1.37%, while the Zimbabwe Stock Exchange also gained 0.12%. And in North Africa, the EGX 30 declined by 0.92%. Let's do a quick round on some of the Pan-African currencies. The rand strengthened 0.44% to 17.14 against the dollar, while the Egyptian pound eased 0.25%. The CFA franc was nearly unchanged at 566.81. The Kenyan shilling inched up 0.03% to 129.80. The Moroccan dirham slipped 0.07% and the naira dipped 0.08% to 1,446 naira 68 kobo. Let's switch into the commodities data deck, beginning with energy prices. Energy prices were mixed today. Brent crude fell 0.24% to $62.33, while US WTI declined 0.16% to $57.86. Natural gas rose 2.77% to $4.60, and Arabian gasoline gained 0.34% to $1.86 as at 13:27 GMT. Now, finally, two soft prices. Cocoa rose 0.43%, while coffee slipped 0.57% to $381.10. Cotton gained 0.28%, while palm oil declined 0.04%, and sugar rose 0.54% to $14.99 as at 13:30 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you so much for those market updates. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching and bye for now.